Hello and welcome to this very special conversation around women, finance and investing. The year is almost reaching an end, and what an eventful year it's been for the economy and for all of us at large battling a pandemic. What's interesting is that different strains have emerged from our economic recovery. So on the one side, you've got a stock market that has had a dream run in the last couple of months. On the other side, there are pressure points that emerge both on the MSME section, on individuals who may have faced job losses, and of course, in terms of the lack of jobs, especially for women. What is important and what is patently clear, though, is the need for financial investing, and to take a step back from there, the need for more financial education. Some of that has been touched in previous conversations by us, and we thought we'd really take a deep dive with it and talk about both the importance of getting more and more women into the fold of investing, what the best products might be for her, speaking to in a language that women understand, and how to start plotting that pyramid in terms of gaining both financial independence and, of course, making the best financial decisions tailored to your needs. I am going to be joined by two very special ladies to talk exactly about that. But before I do that, let me set out the context of what we're discussing over here, which is a unique initiative by the Aditya Birla Group. They have launched an initiative in collaboration with the Women's Collection Canada, and it's called For Her. The essential goal over there being to bring more women into the fold of financial inclusion, to talk about active personal finance management, something many women, including salaried and employed women, sometimes tend not to attend to decisions about their finances themselves. And of course, it's looking to create women-oriented financial education, which I think really is the need and the call of the hour at this point. So let me, without further ado, talk a little bit more about that program and introduce our two speakers and guests today. Ms. Sunaina Dakuna, who is co-head of fixed income at Aditya Birla Sun Life AMC Limited, and Ms. Kirti Gupta, who is COO of Aditya Birla Sun Life AMC Limited. Thank you, ladies, both of you, for joining in. I think it's a great time to have this conversation because of the auspicious and festive air that we've all got going in our cities. And it's a great time to start talking about, the importance of making financial choices for yourself. Kirti, maybe I could sort of, open the floor to you, because what gladdens my heart is that in the last couple of years, there is a realization that when you talk about financial investing, it's not a one size fits all. You need to start thinking for specific individuals, and you definitely need to start thinking about gender within that.
Yeah, Mitali, I think that's very, very important aspect out there. The different social, cultural, educational, financial background leads to a very different kind of a financial needs. Both on one side, the capability, and another on the side of acceptability. We need to have marry these 2 points together for us to understand what would be the exact need for that particular individual, and how do I provide that particular solution to that individual. So it's very, very important that we take various facets into account along with gender being very, very important aspect, definitely, because the risk-taking capacity, the approach, the objectives may be different. But this needs to be weaved along with all other parameters, as I mentioned, your understanding of that particular subject, your willingness to take that particular risk, and your planning that what exactly you want to do with that particular financial wealth or money, how you want to manage that. So you need to weave all these things together and provide a very specific solutions. And today, you all know, we are living into a hyper customization world, where N needs to be equal to 1. And I think financial services should also be part of the same arena.
So, Lena, let me draw you into this conversation with the same question, but, let me change the context a little bit, which is that it's important always to look back at the data we have so far, especially when we're considering women as one specific interest group and how they may invest. Has their approach to money management generally been different from men, and how so?
I'm not sure if approach to money management is really very different for women versus, say, men. I think women also have their own goals, both short-term goals as well as long-term goals. Many of them very similar to our men folk. So short-term, planning that travel buying that exquisite piece of jewelry. But, in terms of long-term goals, they're all pretty much the same. Planning for your child's education, looking to buy that dream house, and you'll probably plan it along with, your other family members as well. Where I think maybe women have a slightly different approach to, and they should have, many women should also have a slightly different approach to money management, is in terms of, the fact that they should ideally build an emergency fund. Because, women tend to, at least statistics tell us, women world over generally live longer than men. And it is also likely that, some women may have a break in their earnings because of childcare or because of taking care of aged parents. So I think that is somewhere that, you need to, women probably need to take that into consideration, and they probably do, which then makes them a little more risk averse, a little cautious. So you start getting those aspects creeping into, their way of money management as well. But I think from an overall perspective, it's ultimately the various goals that the investor has, her risk return profile, the kind of volatility she is able to bear, and that's what ultimately helps in creating the optimum asset allocation.
I want to talk in depth about technology, of course, but before that, Kirti, just to extend this particular part of the conversation we're having, there was an interesting survey conducted many years back where, if you place the term as financial investing, there were less women interested, but when you termed it as financial security, there were more women interested in having that conversation about how they could be part of it. And that ties in with what Sunaina was saying. My question really to you is, has the mutual fund community or the larger financial community understood the nuances of how to talk to women, and what do you think is the most important in terms of communicating that to women when you're talking about financial independence or security or an emergency fund? How should you be saying it to really connect with them?
Vitali, I think it's very important aspect how you communicate, and the way you communicate, you'll get the output out there. So let's take an example. We try and understand what is the person's risk-taking capacity. When you talk to a woman and saying is what your risk-taking capacity, she may or may not be lewd to that particular aspect. But you try and tell them that how you will be able to protect your capital or ensure the kitty of savings that you have built for yourself will remain with you, but you will be able to grow it. Probably her acceptability of that particular thought process would be far more better. And you will be able to engage in a very healthy conversation out there. So most important part happens is, first, you need to understand the language and communicate in that particular language rather than using the so-called financial jargons, which may take them away. The second important aspect that you need to understand why that person wants to do a financial management or security or investment. The moment you start assigning a particular reason or a goal or motto behind that, then the involvement of that person would be multifold out there. The moment I know I'm saving for my child education, which is 5 years away, and I know that for doing that, I'll need X amount of kitty, she would be far more attuned to conversation with you and making a much better plan. She would monitor it better and she would execute it better. And if you communicate in that particular process, she would be far more open to reanalyze things around it. So that's second important aspect that you have happen, that you need to understand her goals better, and you need to understand and make her understand how she can achieve them. So when you're making that communications, please make a far more holistic communication. Please make very, very simple communications. Please make communications which she can relate to. So you have both technical things out there, you are getting emotions out there, and you are also understanding third, very her social and cultural background. That's very, very important, because then the adaptability of your communications, your products, your thought process, they would have better alignment and better acceptability.
I like the fact that you use the word holistic, and let me, use that to turn to Sunaina. That's the other part of the story, Sunaina. I mean, at this point, we're debating this as if women are functioning in an island, which they are not. And often it is the larger community or the nuclear family, the nucleus of where they are based at, that really needs to understand the importance of why they should be first included in this conversation. And secondly, they should be allowed to make their own choices. There's many layers on that. Is there something that the investing community can do in order to better sensitize the larger family bracket that we're talking about? Here's why your wife or your mother or your daughter-in-law should be part of conversations about finances.
I think one of the big issues that, I've seen, particularly with the older generation in my family, extended family, is that women are very financially unprepared. And it exactly goes to what you're saying. Those conversations are not happening at the basic household level. So you have a situation where, in a traditional family, let's say, while the household budget may be managed by the woman, and she's very good at managing the expenses of the house and saving, and then maybe investing that in her own manner and own way, but she probably very often, you'll use more traditional, you'll see women using more traditional methods of saving or investing in gold. But the bigger discussions about what's the family's net worth, what are the investments, do we have insurance, where things are placed, those discussions are not happening. And as a result, if life takes a very unexpected turn, suddenly the woman may find herself having to pick up the financial reins and being absolutely out of depth, because you don't even know where to start. You don't know what is where. So I think those discussions at the basic family level, maybe if it started in terms of financial literacy, if some amount of financial literacy starts early at school, and that's very important because you have very highly educated people, but financial literacy is not part of our curriculum, right? It's only probably if you take a specialist finance course at some level that you're taught, 101 of economics, 101 of investing and portfolio management. But, those concepts need to be started. And I think maybe platforms like For Her, will help start off those discussions, maybe trigger some thoughts and, push along this discussion, this debate that ideally should happen at various different forums within the family, at a school level, and through forums like this, like For Now.
So Mithali, sorry, Mithali, coming in just to add to what we keep saying is, if you educate a female, you're educating a family. I think that goes very, very clearly for financial literacy. The moment you educate the women in the household, or you involve her, please be rest assured you have taken a path where you'll see your financial health, your financial stability will move to leaps and bounds. And I think that's very important aspect.
Yeah, no, I was just going to ask you, Kirti. I think that's probably the one positive we can point to in a post-COVID world, and there are very few, is the fact that everyone's become more technologically savvy. They understand technology, they understand how to make technology work for them. And here's the situation. We do have a huge jump in active internet users as women, but there's still a big gap, 57% for men and all the way down to 43% for women. Is technology the best tool, you think, to take this conversation about financial literacy or awareness forward? And how are you guys plotting it?
So I would come up and say it always needs to be a combination of physical and digital. I think physical is always the best way to initiate. And how you merge these two worlds together will be able to get you much, much better. Important is they need to be merged in a very seamless manner. So person that either does not feel comfortable with, let's take an example, digital, does not get intimidated, and a person who is not feeling comfortable with physical also does not feel intimidated. So you need to marry very seamlessly both of them together. There would be segment of people who would be very, very comfortable with technology. We need to understand and provide that information onto that particular technological platform. But people who are more comfortable with physical, or let's take an example, there are people who are into a class B, class C, or class D kind of a town. And it's very important when you're talking about the overall inclusions We need to include them also. We probably need to provide not just physical, but in the local language. And I think the 4R provides that kind of a thing. Today, all of us are talking a lot about vernacular. The reason why we want vernacular more is so that you're able to include far bigger, far larger and far wider section of the society into the overall inclusion piece. So I would come up and say it's a combination of both. We need to be present everywhere and let the other person choose which is the medium they are more comfortable with. They might be pure physical people, they might be pure digital and technical, but there would be a society or there would be a part of strata which would prefer a more digital way. They would learn in a technical world, technological world, or a digital world. But when it comes to engaging and doing the moment of truth scenario, they would like a kind of a comfort with a physical interaction out there. So we need to be present on all platforms, everywhere, and let the person choose.
Yeah. Sunaina, do you also feel the need that this needs to now be sliced for, across generations? I was speaking to someone from Seva yesterday who was making the point that for the first generation, it was about getting some employment, and that was a huge step up for them. But now you have their daughters who want not just employment, but they also want a degree of financial independence. They'd like to take a holiday. They'd like to purchase a luxury good for themselves. They want to have some fun with this newfound economic independence as well. How do we sort of create a different syntax for across generations as well when we're talking about investing?
So I think, it all boils down in the end to planning your investment basis a couple of things, your risk return profile. So, if to take the examples and you're looking at two different age groups, if it's a slightly older age group, assuming that, they're a little more risk averse, then, there are so many products available, in the market. In the mutual fund industry itself, you've got 16 categories in debt, 11 categories in equity, and 6 in hybrid. I mean, that's way too many products, and you actually can tailor make your portfolio by picking and choosing based on what your risk profile is, what your goals are, and the timeline to your goals. And then at every generation, at every age group, you can actually then build that kind of a portfolio. So, if you want to be a little more risk averse, you can have a higher exposure to, let's say, the more stable asset classes. If you're very traditional, you can move from physical gold to digital gold. There's so many other ways in which you can introduce what you would otherwise have invested in, using technology, using what's available nowadays to actually go out there and invest. And for the younger generation, technology has actually made a very, very big difference, because sitting in the comfort of your house, you're actually able to do everything possible. At a click of a button, you're able to invest, redeem, do your video KYC, and it also affords you privacy, because as Kirti was talking, in smaller towns, maybe not everybody is as mobile to go out and go into the physical world, but to actually make the investment and from the safety of their house, and with a fair amount of privacy, then you know exactly who has access to the information and the data that you're actually putting out there and you're investing in. So I think it depends, on various things. But I had in rural India as well, you actually see the kind of change that's actually being brought about, through a huge amount of digitization that Pradhan Mantri Awas Yojana push, and more importantly, through microfinance and the loans that these women are able to take. Because of our investments in microfinance companies, I've done a fair amount of ground level research, and to actually go there, see the kind of education that they get from the microfinance companies, sit in those center meetings and hear those stories, about how they're able to actually change their lives, how they've understood finance, how they're beginning to understand what interest is all about, something as basic a concept as, urban women may actually consider that, and then ability to actually go and save. And they're actually, through the same organizations, able to find ways in which, whatever economic activity they're doing, they're able to generate money and actually save. So I think in various different ways, there are entities out there who have actually created fair amount of platforms, cutting through generations, and I think cutting through, backgrounds as well.
Yeah, no, and I think it bears mention that so many of these microfinance institutions and women-only banks talk about how high the repayment ratios are. There are very, very few defaults, which is another sign of how seriously women take the idea of money and loans and investing. Kirti, you've watched trends over the years. Has it changed in terms of how women want to invest between the different asset classes available?
So I would certainly say yes. I think if I try and move how my grandmother used to save and invest, how my mother used to do, how I used to, and I do not know how my kids will do.
You're an exception. You're a financial whiz. You don't count.
I'm a financial, but not my grandmother and my mother.
Yeah.
But their approach and the way they used to do things are very, very different. So the first most important shift that I find is they were more keen on doing savings. They did not understand the concept of investment. So that's the one big shift I made. The second big shift, which I understand and realize, is they were more into an unorganized segments. When I say unorganized segments, if they want to earn more interest, something which they only understand fixed deposits, how they used to do, they will find out people nearby them whom they knew very well, and they will lend money to them. They had their own mechanism to do a risk evaluations that we talk of a risk monitoring. They will come and chit chat with that particular guy. So the things are moving. Earlier when things were very unorganized, now slowly they're moving to more structured and organized way of making an investment, which is happening. The third important piece, earlier they used to, where they would make investments. So it was predominantly a physical world. Then you got to go into a real estate. So predominantly they were understanding more of a physical assets and that. And then when I look at the next generation, they started talking about a bit of a financial. So RD or fixed deposits kind of a thing, or keeping money into bank. But now when I see my peers and my next generation, I started seeing is they start talking about equity. Okay, explain me what mutual fund happens. How do I do an insurance? I would come up and say, when I see my generation people and the next generation people, probably Sunana and coming back, the moment you start working, you want to start, okay, I need to do a SIP. I want to buy an insurance. Is it possible for me to buy a house? Because then I would be able to service those kind of things. So definitely there's a shift happening. But is this shift happening wide enough? Then probably I'll say the answer is still no. We need to make this spread happening at a much, much wider scale. We need to expand that. And I think that's precisely the reason we need much more programs like for her. And not just at metros or class 1 towns. We need to move to class 2, class 3, class 4 kind of towns out there.
Yeah, no, absolutely. In fact, I was looking at the record AUMs, Kirti, and thinking just the other day, it would be great if we had, gender disaggregated data here to understand how many women are coming into the fold of SIPs and mutual fund investing, that would be great. And you guys
this is such an important aspect you would not believe. Since last few days, I was trying to collect some kind of a data, and we all are talking about that a good number of depositories account have been opened by individuals. I couldn't find anywhere that what percentage is exactly women. And I couldn't find it out. I came to know that we do not capture gender when we are opening the DP account. And in the current world, where we're seeing is data analytics and the customization, or N is equal to 1. Just imagine we don't even have the basic.
Yeah.
How we are going to customize it. So I think it's extremely important for all of us to understand that if we need to provide the right kind of an educations, the right kind of an inputs and support, we need to have the right kind of an information also available. And I need not to say, we know if you have the information, you have the best of the customization of solutions you can provide out there. So yeah, it's very, very important. We need to start capturing that and enriching the data pertaining to not just for gender, But along with gender, what are the various other dimensions which are involved into it?
Yeah, no, I really hope you guys and AMFI as a whole takes this up with the regulatory body. It would be very vital information. Sunena, the other thing that happens is that when you're new to the field, it's almost like it's an ocean. I mean, there are so many mutual funds, but that's like a double-edged sword. There are so many mutual funds. What do I do? Where do I invest? Is there a rudimentary sort of graph that you would build for someone looking to invest, saying, hey, diversify between X, Y, and Z as assets, try and allocate this much here and that much here, even as a ballpark, which you can then, tweak up and down depending on your own needs?
So I think maybe to start off with, women like to do a lot of research, I've realized. They like to be, they're fairly conscious. They like to dig deep into what they're doing. So there's a lot of information available out there. Read up on it and then start investing. Maybe you start with small amounts and sums of money. In a mutual fund, you can start with as little as 500 rupees. And then, take it off from there. In order to plan a more elaborate asset allocation, reach out maybe to a financial planner or a financial advisor who will be able to help you, actually build that portfolio. But I think what's most important, is that you start early, invest regularly, and do a fair amount of research. There are thousands of variants of mobile phones available. And yet, when you want to make that purchase, I've seen a lot of women actually go through, and it's a very technical subject as well, if you think about it. Go through great depths, do a great amount of research, and come and know exactly what they want to buy. I had this experience with my house help the other day. She came to me and said, large sales are going on. Please buy this for me online. I want this particular model of a phone. And I was amazed. I said, how have you chosen this model? And then she told me exactly what all she looked at, et cetera, et cetera. So, we have that ability to do that research. The information is available out there, in the world today. So maybe, women should start early, research a lot, read a lot, and keep this whole big, investment is a big bogey kind of, framework that I think a lot of people actually have, that, it's too esoteric, it's too difficult, maybe, investment professionals like myself tend to use a fair amount of jargon. So, that's something that also puts off people. But, it's not. If you read articles, if you speak, if you research a little bit, just the same way you would do for a mobile phone, or, to buy anything else, a fridge or a TV or anything else that you do a fair amount of research for, which actually are fairly, they are gadgets, and, fair amount of technology goes into them themselves. Then you can do it similarly, for your own financial independence and for your own, to build your own portfolio. Start small, but start.
Yeah, no, absolutely. And it's always the right time to start. Kirti, at the risk of sounding biased, I may also say that women are more receptive to learning from their mistakes, as you will see when we drive and ask for directions as well. So let me ask you if, you've spotted some common trip-ups that women tend to experience or encounter while they invest, and that could serve as a red flag or a warning for someone who's looking to get into the investment world.
So I think your point is, women has one big kind of a burden put on their heads and says, come what may, I should never fail. I think that's the first bias we need to break it out and come back and say it's okay to fail. Till the time you're learning from it, it's perfectly fine. Just don't make the same mistake again. Just learn it and move forward. And I think in the financial world, you become far more conscious, because there's some things which is hard earned by you. You do not want to lose it. But please reassure yourself, it's the step journey. When you're learning a cycling, you fell down, but you got up and again restarted doing the same thing out here. Just start doing it. As Sunena mentions, just start. So please first do that. It's okay to fail. First and foremost rule in financial world, it's perfectly fine. Or in life, it's perfectly fine to fail and learn and move forward. The another important aspect happens is we're very shy of asking questions. we feel this other person will think, I do not know, and probably that would act as a disadvantage for us. And I say, if you don't ask a questions, then you're creating a bigger damage for yourself and you will always remain. So I keep saying is they're the three best friends for everybody. What, why, and how. Just make them best friends of yours and keep asking these three words. Please be rest assured next time you will be able to provide answer than asking the question. So make them best friends, ask questions, and it's okay. You do not know, the universe is vast. There's nobody on this earth who can come back and says, I know everything. So it's perfectly fine for you know not to know it, but make an effort to learn that. So that becomes my second mantra, learn out there. The third important is build an ecosystem around yourself. In today's world, when you know there's nobody who knows everything and no decisions are the best decisions, it's always good to sit, discuss and says, is this right? Are there different parameters I need to look at or not? We don't build an ecosystem for ourselves. Many a time I keep saying is that if you're working and you have a kid at home and sometimes you realize that I can't go and put the kid on a creche or my household help is not coming up, you have an ecosystem of friends who will come up and says, can I drop my kid at your place? You build that ecosystem, then why are you not building an ecosystem for your own financial health, which you know is going to get you so much of an advantage? The quality of life that you'll be able to improve, not just for yourself, for your family and for next generation. Why can't we do that? Just do that. Build an ecosystem for your. The fourth important is keep learning. Keep understanding new dimensions of investments, new products that are coming up. It's okay. You want to make investment in them or not? Maybe that you decide based on your ability of what kind of a cash flows you need or what kind of an assets class you're comfortable. But please learn. At some part of a time, you will understand, today I'm not ready to make that investment in this asset class, but tomorrow I'll be ready. But if that part of a time I did not know, then I missed the bus. So I keep saying is make friends with what, why, and how. Take charge and just move forward.
Yeah, no, absolutely. And for all the men who may be watching the show, I would encourage you to encourage the women in your household to do that. You know, help them build an ecosystem. If they don't have it, put that in place for them. I am conscious of time, so you know, let me go to both of you one by one and talk a little bit about the For Her initiative. To your mind, Sunena, what would you say should be the key goals for the For Her initiative? Who do you want to reach, and what's the message, the key message that you want to put across for someone who's listening in and really wants to make that decision or take that step into investing?
I just want to say that, start investing, invest small, but start investing. Research, read up, keep learning. And keep an open mind. So For Her, is a program that's trying to reach out to millions of women, and through this initiative, actually try and increase the financial literacy quotient that we have in our country, which actually is very, very low amongst women. Start at the basics and build up from there, and the tremendous joy and confidence that it will bring to you. As an individual, and that you can, share with your family, so that you can not only take care of yourself, but also, you can look after the financial well-being of your family, maybe, should be and will be, I think, the biggest motivator for every woman to actually go out there, put yourself out, as Kirti was saying, to build that ecosystem, ask those silly questions that you think at least are silly questions, and actually go learn, invest, and start off. And I think initiative like For Her is, in various ways, through various forums like this one and platforms like this one, actually trying to achieve that.
Yeah. Kirti, before I turn to you, in fact, for anyone who's watching, I just wanted to share an interesting trend that's happened through the last year, which is that jobs have seen a precipitous fall for women, especially in B and C cities. But what we've observed through the trends that we've been looking at is that all these women have now turned to entrepreneurship. Because that's a skill they hold on to. I can still knit and I can still bake and I can put that online and create a business out of it. And that's, it's almost perfect timing to talk about financial investing building some kind of treasure of cash holdings while you're trying to scale a business as well. How would you put all this together and, make it like a motto or a goal for her?
Oh, Bitali, you raised a very pertinent point. I think the amount of opportunities, I would say COVID has opened for people who are at home and the home entrepreneurs. That's a very big segment which has come up. And it's very, very important for all these home entrepreneurs to understand that whatever you are earning, now you need to make that money also earn for you. And that's the way you need to be far more financially educated, financially literate, and take that plunge out there. And for her kind of a platform, ready to do exactly the same thing for you. Another important aspects that I personally believe, as a women, we also need to take a kind of a charge. And we used to talk about a program earlier, each one teach one. I think that's equally important when it comes to financials. When person as an individual, if you understand, you should take up that responsibility and says, among my ecosystem, I would ensure that I am able to teach 5 people, make them more financially literate, help them making that journey, which is required for becoming financially independent and becoming financially literate out there. So I become an ecosystem, and in turn, they become the ecosystem for next set of 5, 10, or whatever you can do that particular route. And we should do that. The important aspects, as we all know, you need to start at some point of a time. Why not that start point be today?
No, absolutely. Fantastic points from both of you. I think the most important thing for someone watching, which you both echoed, is don't be scared. First of all, it's not rocket science. Second of all, it's not a shark. Just jump in, take baby steps. And this is important. It's a here and now conversation across ages, I think, for all women. So thank you both so much for joining in. Good luck with your initiative as well. I hope to speak to you over the months and see it scale from one level to the other. Thank you again for joining in today.
Thank you very much.
Thanks for that.
Thanks.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.